Till now, we have covered various interesting topics for mutual fund SIP investors, like which debit date is a good day to make maximum benefit out of your SIP, and what is the right frequency to choose. Is it a weekly SIP or a daily SIP or a monthly SIP? And what is an ideal time horizon for an SIP mutual fund investor to get maximum benefit from his portfolio? So today we have come out with another interesting concept, like which category of fund to be chosen, whether it is a large cap, mid cap or a small cap. So myself, I am Narendra, representing Manavi Wealth Pvt Ltd, and I am a certified investment planning specialist. So let's see today's video. Many a times we have come across these words called large cap, mid cap and small cap. So one who have exposure towards stock market and one who have veteran equity mutual fund investor might know what is the difference between this large cap, mid cap and small cap. And for the people who are watching our video first time, or ones who wanted to know in detail what is the difference between these three categories, so this video is for you. So as per the SEBI's definition, the top 100 companies in NSE represents large cap stocks, and the fund which invests into these stocks is called a large cap fund. And from 101st company to 250th company, these stocks represents mid cap stocks, and the fund which invests into these mid cap stocks is called mid cap fund. And finally, from 251st stock to 500th stock, these stocks represents small cap universe, and the fund which invests into the small cap universe are called small cap fund. So many a times people are fascinated towards return and they try to invest into small cap and mid cap funds without understanding the risk appetite. So with a small disclaimer, I would like to continue this video. So one who wanted to invest into the small cap, mid cap or whatever the category of the mutual fund scheme it could be, please do take the advice of your financial advisor or do consult your mutual fund distributor. So he will try to assess your risk appetite and he would recommend you according to your risk appetite. So only based on that, you should consider investing into the category of the funds. So if you see what is the return comparison or the risk comparison across the large cap, mid cap and small cap, here is an analysis of last 18 years data from April 2005 till January 2023. One who would have invested for a 10-year horizon into a large cap or a mid cap or a small cap index. So here is a return comparison. So it says person who invested for 10-year period into a Nifty 100 TRI index, which is large cap index, the minimum return one have seen is 4.3% and the maximum return one have seen is 16.3% return, whereas the average return is 12.5%. And if you see the interesting part here, 100% of the times people have never ever seen any sort of negative return. That is the beauty of your time period. If you see the person who stayed invested for 10-year period into a mid cap index, the least return one have seen is 6% and the maximum return one have seen is 21.4% return, and the average return it is 16.5%. And if you see the percentage times positive return, it is again the 100%, which says one who stayed invested for 10-year period in an SIP mode into a large cap index also have never seen a negative return. And if you see the small cap index, Nifty small cap 250 TRI, so this clearly says one who stayed even for a 10-year period also have seen a negative of 0.4%. And the maximum return one has seen in a small cap index is 20%. And the average return it is 13.5%. So if you see the positive return percentage times, it is 99% of the times people have seen positive return, one who hold the small cap fund for a 10-year period. So this chart is clearly reveals that out of these three indices or three category of funds, mid cap scores better return than the large cap and the small cap. So one who can digest little more volatility and one who want a little better return, then mid cap funds would be an ideal bet. And please do not consider this as an investment recommendation. So kindly consider your advisor's recommendation before investing into any category of equity mutual fund schemes. So keep watching us and keep encouraging us. Thank you.
If you like the content in the video, please like and share the video and subscribe to our YouTube channel. If you need any personal appointment, do call us to the below number.